What's the biggest regret of investors with 10 years of experience? And what wouldn't they do at all if they were starting today? We're gonna tell you about top 6 mistakes you should avoid as a beginner investor. If you are interested in investment, subscribe to our channel not to miss new videos on the topic. Hi, this is Robo.cash investment platform. Over the past 10 years, European investment doubled from 46 to 95 billion euro. This happened thanks to the appearance of new ways of investment and, most importantly, internet-based tools to grow your capital. Building passive income is becoming more popular and many people have begun to invest. But what if we ask investors who started 10 years ago? What was their biggest regret at the start and what would they advise to beginning investors? Let's see! First regret is not having a financial plan. Investment is one of the ways of achieving your goals. So before you start, you should clearly define these goals and understand your resources. You can use the SMART system to set your targets right. First, be specific. What do you actually want? It can be a certain car or retiring at an early age. Then, your goal must be measurable. How much money do you need to buy your dream car? How much do you need to have to stop working at a certain age? This is how you know you don't get off the rails. Also, the goal has to be attainable. You need to have enough resources to achieve it. When it comes to investment, you need to be putting aside a certain amount of money over set periods. Normally, it happens every month. It is vital that your goal is relevant to you. Ask yourself if you actually want to achieve this particular goal. Or is it your parents, or your partner, or your boss's dream, and not yours? Finally, your goal must be time-bound. Set a deadline for yourself so you can plan your investment wisely. When you have a SMART goal, it should be easy to build a financial plan that will help not to go off track with investment. Second regret: buying something hot. Here's a pro tip: never invest in something you don't understand just because everybody does. Do you remember that time when Elon Musk made the Bitcoin prices skyrocket and then plummet with just 2 tweets? So, Elon decided, hey, I want to sell my cars for cryptocurrency. People who were interested in investment and also followed Elon on Twitter started buying crypto because they thought it had huge prospects. With the rise in demand, the price was rising too. Everyone was happy. But then, Elon has a girlfriend who really cares for the environment. So, he posts a new tweet. Cryptocurrency is a good idea on many levels and we believe it has a promising future, but this cannot come at great cost to environment. Right after this tweet, the Bitcoin price dropped by 10%. The people who'd been led by Elon Musk's tweet and bought Bitcoins earlier were now selling them at a lower price, so they lost money. Don't invest in assets until you're 100% sure you understand how they work. There's an easy way to check it. If you can explain how this asset works to a 10-year-old child in just 2 minutes, you're ready to invest. Third regret: investing in only one type of asset. Or, as the saying goes, don't put all your eggs in one basket. Remember that investment always carries risk. The market is influenced by thousands of factors, including those that you can hardly predict. For this reason, some assets may grow in price hugely, while others will get worthless in just one day. To avoid this risk, you should diversify your portfolio. Examine several types of assets and choose the right proportion of risk and stability. Remember the golden rule: bigger risks bring bigger profits. Your goal here is to find the perfect risk-reward ratio for you when risky but highly profitable instruments are balanced by low-return but stable assets, like gold. Fourth regret: letting emotions drive your investment. You should follow your financial plan no matter what the news says. Emotions can have a powerful impact on making investment decisions. They drive human behavior, which can affect your expectations of the market and therefore your investment strategy. This is what happened to Stanley Druckenmiller, famous billionaire investor. In 1996, he bet on the fall of IT companies, thinking they were a price bubble. But their stock prices were rising and Druckenmiller's position brought loss. Then, Stanley invested in euro hoping that its price would grow, but also failed, while IT companies' stocks continued to grow and younger, less experienced traders were making income from them. Druckenmiller's pride was hurt, so he invested in IT only to see them fall. His price bubble theory was correct. He lost $3 billion out of fear of being outpaced by young traders. In his speech in 2015, he says, "I bought IT company stocks worth $6 billion and lost half of it in 6 weeks. If you ask me what I've learned nothing. I'd always known that it was a bad idea to buy those stocks. Of course, you should keep an eye on financial news and trends on the market, but experienced investors advise, every time you want to change your portfolio out of emotions, stop for one moment and ask yourself, does this idea support my big goal?" Fifth regret: starting to invest too late. There are a lot of investors who are waiting for the right time to start. But the thing is that the time may never come. The market is very changeable, and there is hardly a better or worse moment to begin. So, if you already have an emergency fund and you hold no debts, you are ready to invest. If your financial situation is stable, you are ready to invest too. Start with an available small amount of money you already have. Don't wait, because this is the largest regret of experienced investors. Waiting to invest a big amount of money. People tend to think big, so they wait to save up a big amount of money to start investing. But while they are saving, they are actually losing. Inflation decreases the worth of money, and there is always a chance you might spend it for something that seems important, but in fact is not. When people invest their money, they not only keep it, but also multiply it. Start with a minimal amount of money to invest. Thanks to that, you will learn how the market works and become more financially independent earlier. Our platform provides investments starting from €10 and 10 to 12% of returns. Check our link in info box and become part of the investors of Robo.cash.